Welcome to this Institute of Directors Property Drivers for 2021 and Beyond digital event. So lots of people joining us now, so just giving a few minutes, we actually get to our allotted time of 1800 hours or 6 p.m. if you prefer. Very large interest in this particular event. Terrific selection of experts that are going to be discussing these topics around technology, sustainability, and investments. I'm certainly looking forward to hearing their views. I have my pen ready to make notes about what's going to be happening in 2021 and beyond. As you can probably see at the bottom of your screen, the numbers are coming in now. 83 and rising. Of course, as one of our illustrious speakers is kindly joining us from the other side of the world, I will not only say good evening, I will also say good morning, and all the different variables in between it. We have the chat function at the bottom. I'll go through the other bits in about 1 minute's time, but do let us know where you're dialing in from, where you're joining us this evening. It's always interesting to hear what people are doing. And one of the great advantages of this virtual world now is that we're not just talking to people in a room here in London, but we do have this capability to stretch very far and very wide indeed. So do let us know where you're dialing in from. Okay, we're over 100 already. I can see the US, New York area. Excellent. Thank you very much for joining us, Stephen. Berkhamsted, UK, I've got here as well. Guildford, do keep putting it in there where you're coming in from. It's fascinating. All the people we get here, Essex, sunny Isleworth, South Africa as well. So welcome, South Africa. Okay, let's get moving. 1802, numbers are coming up. So a formal welcome to Property Drivers for 2021 and Beyond, technology, sustainability, and investment. My name is David Stringer Lamar. I'm the Managing Director of Fortis Consulting London. We're business connectors and deal makers. I'm also the Strategy Director at Medical Prime, which is the city's #1 clinic for menopause specializations. And I'm chair of the Institute of Directors London region, the powerhouse region within the great family that is the IoD. And with respect to property, I have a specific commercial interest in getting much more stained glass into buildings. Indeed, I'm a member of the worshipful company of glaziers and painters of glass here in the city of London. My first technical job, or my first formal job, of course, is to mention that this session is being recorded. For those of you who've now joined us, please, at the bottom there in the chat, as I mentioned to the people who were here a little earlier, do let us know where you're dialing in from. Also, let us know something about yourself as well and your business, because the IoDs you can see in front of us here on the Business Extra series, it's about connectivity. So let's connect, let's see what we have in common. Also, of course, about developing leaders, and also about profile and engaging with the various stakeholders that we have. Now, when, of course, COVID hit us, we had the Business Extra series we put together, and I thank everybody who quickly, goodness me, it's a year ago now, isn't it, who actually all had to put all that effort together. Now, just here down on the bottom there, you will see the Q&A button as well. So do put your questions in there. Richard will be pushing the panel with the questions that you put in there. And you also have the facility to vote for the ones that you find the most popular. We have Jeremy and Shaq in the technical team this evening, so I thank them very much. Comments in the chat, questions in the Q&A, please. Also, we'll be posting a LinkedIn link so you can actually connect with people on there as well. So do engage as much as possible in this digital event. Now, this is being run IoD London region. As I've mentioned, it has 2 branches within it, Central London branch and the City of London branch. So 11 special interest groups in London. This event is being run by the City of London branch and its property special interest group, ably led by Richard Nelson, who we'll be hearing from in a moment. Here's the agenda. Welcome, Business Extra, which I've mentioned, the sponsor spotlight, the panel discussion. Really looking forward to that, and the questions and answers. So that's up to you, ladies and gentlemen, to get those questions in there. And as I say, upvote them. We've already got 38 comments in the chat. Keep those going, keep connecting in there. Now, if we can move over to our video, please. I just want to say a big thank you to tonight's sponsor, Intro Hive. Now, they were founded in 2012. Intro Hive is the fastest growing B2B relationship intelligence and data quality management solution, recently recognized as a top 10 fastest growing tech company in Deloitte's Fast 50 Awards and the Martech 2020 Breakthrough Award winner for Best CRM Innovation. And now for some insights on building online relationships from Intro Hive's John Smith. Video, please.
Hi everyone, my name is John Smith and I work for a company called Intro Hive. We're one of your sponsors for this evening. Now, as well as my introduction, I just thought I'd give you a brief summary of some of the pointers for building online relationships that were recently made by one of our industry directors, Ryan O'Sullivan, as part of an article he did on client relationships with TML partners. And there's an awful lot more to this than what I'm just going to cover today. So to read the full article, please do get in touch with me. I'll be happy to send it through. So we've all felt the shift in business over the last year. Gone are all those in-person events, the meetings, the quick coffees, or something a bit stronger, in favour of a computer screen. And while there are many benefits to this, not least the fact that you don't actually have to travel to get to your meetings, it also brings its own challenges. You know, whether this is kids interrupting, whether this is a dodgy internet connection, or even down to those accidental cat filters. But one of the biggest challenges that we've experienced and seen has been the impact on building relationships. By removing the ability to meet someone in person, each meeting lost a bit of that personal connection as well. Everything becomes a bit more business, a bit less pleasure. And let's face it, people buy from people. And this was no more evident than during the first lockdown, where appetite for risk just went completely out the door. People didn't want to go to new suppliers, so instead they turned to their existing connections for all their new business needs. So from a prospecting point of view, even getting someone on a video conference became a real challenge. And once you were there, connection and rapport was so hard to build. So if you think back to those first few meetings that you had post-lockdown, that first lockdown, and most of them will have been with long-term clients or long-term prospects, people who you've had conversations with in the past, and it would be things like, how are you doing? Just checking in to see you're okay. Those human connections and showing an element of concern, something that's really hard to do if you don't have that existing relationship. And also doing things like that helps you to rekindle and strengthen those relationships, building not just rapport, but an all-important trust around you and your brand or your company that you work for. But how can you build this when you're starting from scratch? Well, the first way is by turning to your existing connections for help. So this is one of the areas that drove significant growth for us last year, looking at partnerships, getting those personal introductions made by people who could establish our credibility and our brand before we even got online with them. If you've not got an existing partnership network to call on yourself, then maybe you want to look at your CRM or look at your internal staff. You might be surprised at who can find you an in at another company, or even just a nugget of information that will help you to stand out from the crowd. Once you're there, tailor your approach. It always surprises me how many people use a sort of a generic set of slides, but the impact of this is far more keenly felt when you can't have those initial elevator chats before you get into the meetings. You don't have that time setting things up to just chat back and forth and get to know someone. You could be the industry experts, but does your prospect know this? So by taking time to just tailor your content, you're showing your meeting attendees that you care about their needs rather than just covering the same old content every time. And the last one is give time for small talk. Now, this could be before the meeting, this could be after the meeting. One of the ways that you could do this is either to set a 10-minute slot at the start of the meeting that you specifically designate to having conversations, or even just inviting one or two of your key people that you want to speak to show up early. Say to them, hey, we've got a meeting at 2, join it at 1:45, let's just have a chat. And what that helps you to do then is to build up a relationship and get to understand them and get them to understand you before you get down to the real nitty-gritty in the business. Now, these are just a few of the points that were raised in the article, and they apply not just now, but kind of as we move forwards. I don't think face-to-face meetings, work lunches, drinks, things like that are going to disappear forever, but I do believe that for better or worse, video conferencing is here to stay. Now, whether this forms a core part of your technology pack, that's one thing, but you can bet your life that all of your prospects and all of the people you're speaking to will be using it. As I've outlined today, that's not a bad thing. It doesn't stop you from being able to build and nurture these strong and long-lasting relationships and keep that human element, but it does mean that you need to look at things slightly differently and prepare for that fact. Now, if you'd like to find out more, or read the full article, then please do get in touch. I'm always happy to talk. But for now, thank you very much and enjoy the rest of your evening.
Well, that was great. Thank you, John, for those few words of wisdom on building online relationships. We do appreciate their sponsorship. They help us put these events on and bring you this great content. So really do appreciate that. Welcome all. Thank you, everyone, for joining us this evening from around the world. I'm really pleased to see such an international audience. We like that. We are the IoD City of London, but we do reach out to the entire world. Welcome tonight for our Property Drivers for 2021 and Beyond session. We thought we would do something a little bit different tonight. Normally we have a panel all talking about one particular subject. I think the subject here is change and what's driving it. And that's why we thought we'd get some people from some very different backgrounds. We know technology is expected to really take off and accelerate in the post-COVID world, especially in the property industry with all the advances being made. We know sustainability is higher on boardroom agendas than it's ever been before. And with COP26 being held in Glasgow this year, it's highlighted almost every day here in the UK news and in the press. And investments, what's happening with property investment? Is it dead in the water, or is it going to be seeing a resurgence after the pandemic starts to clear up? There are a lot of issues, and we could probably go on with a number of other subjects, but we thought we'd focus on these three. So without further ado, I'd just like to give a very quick introduction to our three panelists, and then we'll hand off to the first one. So I'm going to go in reverse order from their presentations. So Alex Moss, we're pleased to have. He's Director of Real Estate Research Center at the Business School, also Director of the Master of Science in Global Finance online course, and a practitioner. He's the Director of Concilia Capital, which is a real estate investment advisory firm. It looks at performance and strategies of real estate investments in infrastructure and real assets. So Alex really combines research, academia, and practitioner. Pleased to have Munish Datta joining us from the UK Green Building Council. He's Director of Membership and Operations, responsible for looking after the membership and day-to-day operations at UKGBC. He's also a fellow of the Institute of Sustainability Leadership at the University of Cambridge. And he's a member of the UK government's Green Construction Board. Munish also, to his fame, was involved in leading and delivering on Marks and Spencer's famous sustainability strategy, Plan A, for its entire 4 billion property portfolio. And finally, joining us, we're privileged to have Nikki joining us all the way from Sydney, Australia. Nikki Greenberg, founder of Real Estate of the Future and also Women in PropTech. And Nikki is a futurist and thought leader in the real estate industry, particularly around technology. And she's going to talk to us about some of the things that are happening in robotics, sustainability, IoT, and so forth. So without further ado, I'd like to hand over to Nikki to lead us off.
Great, thank you so much for your kind introduction. It's an absolute delight to be joining you all here today. Just a disclaimer, we are living in a digital age, as you know, so I am presently in Sydney, Australia, but I do typically reside in New York. So my references tend to be New York centric, even though I'm here. So that is the world that we're living in. So, you know, I spend my days advising real estate firms on how they can find opportunities in the new reality. And especially with technology, there's a whole new layer that's coming in that can bring a real competitive advantage. So I know it's a little bit cheeky that I do call myself a futurist, but what I do like to remind everybody in the property industry, and especially those that are at the design and the construction stage of the cycle, is that we actually need to be thinking about the life of our assets, because they outlive us. You know, I might, if I'm lucky, I'll live to be 100, but you know, our buildings and our communities have a longer life. So it's very important not to just be thinking about what technologies and innovations and structures, etc., that we need today. We actually need to be projecting into the future. The hot topic at the moment, as we all know, is around returning to work, returning to the office. Now, everyone wants to know what the office of the future will look like. So my advice to everyone is to think about, well, we don't actually know, unless somebody does have a crystal ball, which I don't, or can engage in time travel, which we can't. We don't really know what's coming, but we can look at certain trends to get a sense of where do we want to be, where do we want to go. So the metric that I tend to use is talking about 2030 and the opportunity there. And one of the things that we need to realize is that by 2030, 75% of the workforce will be millennials and Gen Z. So this notion of using technology as part of the workforce is here to stay. So as we know with Gen Z, they are digital natives. They were born into a world that already had the internet. They don't know any other way. So when we're designing spaces, we need to realize that this digital engagement is very much part of the way that they operate. And I will, in the chat window, after I've spoken, I'll put in an article from McKinsey that talks about some of the generational differences and in terms of the attitudes that come through with Gen Z. And another point that I'd like to also raise about Gen Z is that, as we know, they are climate warriors, as we saw the protests that happened, I believe it was 2019. So thinking about sustainability is not just a nice to have, but it's integral. So this is going to be the workforce, 75% of the workforce in the next 10 years. I suppose the point that I'm looking to make really is that as we're looking to rebuild our workplaces, our shopping centers, our residences, when we're looking at all of our assets, our warehouses, what we really need to be thinking about is omni-channel. So you need to have this interaction between the physical and the digital. And for every digital experience, there's also going to be a real estate ramification. Think about Zoom. If we're having Zoom conference calls, where in the office are you going to take those calls? In Sydney at the moment, where people are returning to the office, that's one of the problems, that they can't actually have Zoom calls and in-person meetings, or if they are wanting to just have Zoom calls, there's not many quiet spots in the office. So it's turning into a nightmare. It's like having a call center in the background. So that's not quite working for them. So, be thinking, with e-commerce, same type of thing. If you're going to have a store, think about the online reality. And there is an opportunity for real estate owners, developers, operators to be actually thinking about how they package up their offering in terms of having both a physical space and a digital experience to have a turnkey solution. So that's something that's definitely worth thinking about. The other hot topic that I'll also bring in is to state the obvious, that everything starts with data. You really want to be able to measure what's happening in your spaces, both the physical space, how people are using it, indoor air quality, the behaviors of your team, who's interacting with who to get us, because once you have this data, then you can make enriched decisions. So in your spaces, but also with your digital experience. So I'll leave you with those thoughts. I'm happy to answer any questions that you have. I'd also encourage you to reach out to me on my website, nikkigreenberg.com. It's a bit of fun. You'll see some of the ideas that I think about. And yeah, absolute delight to be joining you all here today.
Excellent. Thank you for those thoughts, Nikki. Wow, omni-channel, thinking ahead to 2030. I'm sure a lot of us are struggling to think beyond the end of this year. I'm sure most of us would like to think about having a holiday before we start thinking about designing offices and workplaces for Zoom and collecting all sorts of data. But anyway, let's carry on the conversation into the realm of sustainability. And we'd like to have Munish Datta from UKGBC take us through that.
Thank you for your warm welcome, Richard, and for the invitation from IoD London region. It's great to be with you to share some thoughts about sustainability. Before I go into that in a bit more detail, a little bit about UK Green Building Council, which is an industry-led network with a mission to radically improve the sustainability of the built environment. We're a small but influential charity representing the voice of industry's current and future leaders striving for transformational change. So let me just set some context before I go into things like net zero and ESG, which are terms that are becoming very familiar in this discussion. More than ever, civil society, business, government are calling for climate action at a time when actually they're quite distracted in many ways. And in fact, governments, as they attempt to mitigate the effects of COVID-19, are realizing that economic recovery can occur simultaneously with a green transition. As real estate accounts for more than 40% of global carbon emissions and plays such a significant role in planetary and human health and well-being, I think it is at the very heart of this green recovery or green transition. And 2020 has been a year in so many different ways. So many tipping points have been reached. The scientific evidence around it being the end of the hottest decade ever, the wildfires we saw in many parts of the earth, and the melting ice caps is really clear. These are really strong signals. We're also seeing really strong signals from UK government, mandating climate disclosures for large companies from 2025 onwards, and launching this year later a sovereign green bond. And of course, all of that being underpinned by a 10-point plan for what the government has called a green industrial revolution. Real estate has an important role to play in the post-COVID economic recovery. Projects are ready to stimulate clean growth and create jobs in every part of the country, supporting the levelling up agenda and, very importantly, improving people's health and well-being at a time when this has been more important than ever. We're also seeing a massive signal from the capital markets, and I'm sure we'll hear more about this in a while, but the finance and investor community is showing strong signals of shifting away from high carbon to low and zero carbon. And we're seeing this at UKGBC with that particular sector coming and joining us more than ever. Climate disclosures made by real estate companies made in 2020 were more than double the total number reported in 2019. 2021 is such a critical year. So if 2020 was the tipping point, 21 becomes really critical. The year, as Richard, you said, of COP26, which really enables us to mobilize from commitment to action and put UK built environment at the very heart of that. 125 countries committed to net zero by 2050 already, and that makes up over 50% of global GDP, with Biden bringing the US back into the Paris Agreement and also aiming for net zero. This could be up to 75% of global GDP quite soon. We at UKGBC are planning a series of events in the run-up to COP26, including working with our partners, the World GBC, the COP Office, and the UN to convene a built environment day, given the criticality of this sector. So what's business doing to this changing context? The term ESG, or environmental, social, and governance factors, is becoming common lexicon in the industry. The terms net zero have also become very well used in the industry. And focusing on environmental factors at UKGBC, we have a major program to drive the transition to a net zero carbon built environment. We want to scale up commitment and action through supporting our members on their net zero carbon journey by driving publicly declared uptake to a commitment to net zero carbon buildings. This commitment challenges our members and businesses to reach net zero in operation for all assets under their direct control by 2030, and by 2050 to advocate for all buildings, existing, new, all buildings to be net zero in operation at the very latest by 2050. And over 110 businesses right across the globe have signed up to this. 42 of those are UK GBC members. These are big, big commitments that they're making towards net zero. This proves that not only is the UK able to demonstrate real leadership on decarbonising our built environment, but that our members are already well underway. But commitment's not enough. Alongside that, we work with our members to develop tools and frameworks and case studies to upskill the industry to meet these commitments. This ranges from framework definitions of what net zero actually means to scope 3 carbon reporting for commercial real estate, energy performance targets for offices, and earlier this week, we were really proud to release industry-leading guidance about renewable energy procurement and the role of carbon offsetting within the net zero journey. All these resources are for industry, created by industry and UK GBC members. And our work doesn't just focus on carbon mitigation, we're also working on programs on climate resilience, social value, retrofitting homes, maximizing resource use, and many others that I haven't got time to get into today, but are really critical. And all of these themes are of course interconnected and feature within the broader ESG agenda. We want to take this message mainstream, and that's been one of the biggest strategic changes at UK GBC over the last couple of years. We want to move from just talking about this topic in sustainability teams to it being talked about everywhere. And one of the ways we're doing this is our collaboration with PropTech Week in creating the Climate Crisis Challenge campaign, with a number of activities throughout this year and indeed completed last year as part of this. One of which is a census, which is live at the moment. And it'll be interesting to see whether there have been changes since the census last year, where the results showed that the property sector is really convinced that the climate crisis is a serious problem. We want to make sure that sustainability is not a side discussion or a consideration, that is essential and omnipresent discussion in every transaction, every deal, and every occupational routine. So to summarize, in conclusion, I've got 3 messages for real estate business leaders on this webinar this evening. First, if 2020 was the year when civil society, government, business finally aligned towards making a strong commitment towards climate action despite a global pandemic, then this year, 2021, must be the year when rhetoric and storytelling of a green recovery turns into story doing and green action. Second, real estate is a unique sector in its ability to show very tangible action and realize immediate results. From the work we do with our members, action isn't dependent on size and scale of organization. I can tell you that some of the most sustainable real estate projects are happening in small to medium-sized companies. And the last thing I'll leave you with is that in facing an existential crisis in the form of a pandemic, our members have considered bigger looming climate and biodiversity crises. Be it legislative, financial, technological, social, or moral drivers, we are seeing a paradigm shift in terms of our members putting sustainability and in particular climate action at the heart of their strategies. Thank you for your time, and I look forward to the discussion later, and I'll be dropping some links into the chat for you to consider at your leisure.
Thank you very much, Manish. That was a very good overview of where you're coming from at UK GBC, and I think I love it that we're now seeing 2021 as the year of green action. Let's all hope that happens. And I think you're right about it being interconnected. It was interesting that some of the sustainability discussion, was picked up by Nikki in her comments as well. And I'm sure Alex, who's up next to talk about investment and finance, will talk about how sustainability is affecting his world as well. So with that, over to Alex.
Great. Well, thank you very much indeed, Richard, and thank you for the invitation. It's lovely to join you this evening. I just want to have a quick recap of where we are in terms of levels of investment, what's going on, where London fits in globally, and then have a look at some of the key drivers that we're going to be looking at for sort of 2022 and going forward. And overall, we are seeing incredibly strong demand for real estate, but there's a massive bifurcation of that demand. And you can really think about it in terms of the old and new sectors. The old sectors clearly being things like retail, the new sectors clearly being things such as logistics and indeed residential, but also tech-related assets such as data centers and cell towers. So complete bifurcation there. And that is a trend that's going on globally. And this is an issue because typically we've always thought about the levels of investment and the amount of capital coming in, A, particularly into London, being incredibly large, and B, in particular, to shiny office buildings in central business districts. We all, I'm sure, remember the sales of the walkie-talkie and the cheese grater for over £1 billion each just post-Brexit. So that was, if you like, the old model of global capital flows. The new model is very much industrial and sort of private rented sector residential that are magnets for global capital, as I say, along with those other sort of new sectors. But this does cause a problem for us because of the scale. So to buy one building for £1 billion is absolutely marvelous. To be able to get £1 billion or £2 billion into these new sectors is a real challenge because they're less scalable. And the other key thing on this is really the level of overseas buyers coming in, and what we call a unique buyer pool, which RCA do some work on. And actually what's interesting is that unique buyer pool for global cities, for Manhattan, San Francisco, Singapore, and central London, is actually at its lowest level for a decade. So that's quite interesting, that the amount of new capital coming into those big cities is incredibly low. And where it is going is actually, this will surprise you, the most liquid markets at the moment are Paris and Berlin, way ahead of London. So overall, what are we seeing in terms of investment? We're seeing global investment is a little bit down in 2020, but not really significantly down compared to what it could have been. But it's actually the main force is industrial, followed by residential. So a complete shift. So what's going to drive it going forward? Well, the first thing is that the last time we saw a crisis like this in terms of real estate, obviously the global financial crisis, it was very much a liquidity and a financial crisis. Very few tenants actually went under. This time around, it's all about the operational risk. It's all about the tenant covenants. It's all about the future of the building. Therefore, we're unlikely to see a sharp rebound in terms of activity because there's a lot more operational risk to be underwritten. That's the first thing. And it's interesting, Manish mentioned this term existential crisis. There is a bit of an existential crisis in terms of real estate investment. Lease lengths have come down from 15 years to 5 years. And because of the government's moratorium on pursuing tenants for unpaid rent, you don't actually know how much cash is coming in, how much rents are being paid. And therefore, you don't really know what the valuation is. So that's providing a bit of an existential crisis for the pension fund industry in terms of real estate as an asset class. But to be honest, the same is also true of equities, where you've got huge tech, overvalued tech stocks within the indices, and also within the bond market, where you've obviously got negative interest rates. So therefore, I think there's an existential crisis everywhere, and it's not detracting from levels of investment in real estate. But what it has meant, and we expect this to continue, is that there's a big divergence. So the relatively few low risk or growth areas that you can see, prices have gone completely bonkers. Industrial yields have gone from 6.5 a few years ago down to sort of 3 and something. And there's a complete buyer's strike on unloved assets. An example of the Trafford Centre in Manchester, which was last valued at 1.7 billion, put on the market, failed to achieve the level required. I think best offer was something like 700 million or so. So there's going to be a vacuum of valuation, which could cause a problem. And where we are now is really we have that vacuum, and what we call that is the difference. We call it a bid offer spread between buyers and sellers' expectations of value. So in terms of the new people coming into the market, we would expect the biggest demand to be from private equity houses, because a lot of these assets have to be repositioned. Nikki mentioned the omni-channel, good example, repurposing sort of retail parks, which people don't particularly want at the moment, into omni-channel outlets, i.e. a combination of retail and logistics is one example. And it's really a case that we see private equity houses being the intermediaries for that, repositioning those assets to make them institutionally stabilized and acceptable in a few years' time. That completely suits their sort of strategy. I do think there'll be a few nasty shocks ahead, particularly when the moratorium ends and when local authorities have to sell the shopping centres they've been using to plug their funding gap, and they can't afford the capex to reposition them. So expect a few nasty shocks in those levels. But the one thing I would say is make sure you look at the equity market pricing. The equity market pricing, and someone talked earlier about capital markets, has been way ahead of the game in seeing this divergence of trends. So make sure you keep a close eye on those equity markets. And in terms of ESG, it is absolutely the case. We did a project recently for the IPF that 2 years ago, even 3 years ago, it was seen that if you have a fantastic ESG ESG strategy, that was a unique selling point and differentiation. Now it's quite clear that a lot of companies won't be able to attract capital unless they have an ESG strategy. So I think the whole thing has changed. The extent to which ESG is a key determinant of pricing and a driver of pricing remains to be questioned. I'm sure Monish will be able to give much better answer than me. There are some overlapping issues around that, but clearly it's part of everybody's thinking, and everybody has to think about net zero, energy efficiency, etc. So we see that continuing, and overall we would see that there remains strong demand, but you won't see this bounce back, and there will be continued sector differentials between the old and what we might call the future-proof new sectors. So that's a very quick overview of how the UK is placed within that global context and some of the key drivers that we're facing. And with that, I'd like to hand back to Richard.
Thank you very much, Alex. And I think we're going to bring everybody back up now, have a little bit of a roundtable discussion. And David Stringer-Lamar is going to join us as well with some of the audience Q&A. But first, I just wanted to come back and I think some of the issues you raised were very interesting. The idea that a few years ago, ESG was a USP for fund managers, and now it's a given, it's a must-have. We had just yesterday the new Sustainable Finance Disclosures Regulation come into effect in Europe. I don't know if you're up on speed on that, Alex, or what you think about it, the effect of that coming in and how that's going to
Sure. I will have an amateur's answer at that question and then hand over to Monish, who's the professional. So I would say that is true. So when we did this survey, it's the case that the people who were most advanced on this were certainly the Dutch pension funds, the long-term capital. They were absolutely looking at sustainability in the bigger picture. Now it's a combination of both market demand and, as you rightly say, Richard, regulation coming in. So I think companies have no alternative but to take it on board. And we have seen in the companies that we speak to a huge difference between the people who take it on board but do it as a box ticking exercise to meet the regulations and maybe some level of market demand, and the people who use it to think about their business. So it's part of their whole strategy of thinking about the whole thing about impact investing is what are you having on the overall environment. And the best companies with the best management teams are those who can take that sort of more holistic approach, and for them it's easier to adopt to. But that's my amateur answer. I'd now hand over to Monish.
Thanks, Alex. I'm not completely all over that particular announcement yesterday, Richard, I must admit. But sustainable finance is becoming core business for most banks and fund managers, since the transition to this zero carbon world is going to require trillions and trillions of dollars and pounds of investment. In fact, there's some interesting numbers that it's predicted that green bond issuance will soon exceed $1 trillion, and a similar amount of money sits in ESG-focused funds. And I just want to sort of dwell on sort of the business value of all this a little bit, if I may. You'll all be familiar with the MSCI indices that track stock market performance in several different areas. Well, there is a global green building index, which measures companies that derive 50% or more of their revenues from products and services in green building. So you may be familiar with this. Since 2008, so not something that's just happening now, since 2008, that shows that the green building sector is outperforming the market, and the stocks of these companies are more resilient in the current shock period that we're in effectively than actually the rest of the market. And in fact, MSCI wrote a report last year around ESG trends to watch. And it predicted that the greening of the property portfolio, and I'm quoting here, will move from a nice to have reputation to an imperative in the face of a looming, in speech marks, brown discount. I know you like your green premiums and brown discount, Richard. So brown discount is effectively a devaluation of rental value or devaluation of assets. So, real estate asset owners and investors must take this very seriously, purely, if it's not from a moral and environmental point of view, from a financial point of view, they must take it seriously in terms of zero carbon.
Absolutely. And it occurs to me as you're talking about that, one of the things that hopefully will help us get to that is the advance of technology. And I think there's been so much happening in the last decade that I can't help but realize that, with the advent of 3D printing and robotics and artificial intelligence. Nikki, I was just actually catching up on a little research earlier, you know, the NASA 3D printed habitat competition, where they're expecting robots to build colonies on the moon and eventually Mars. I mean, it's all quite fascinating. But are you seeing, you know, are you seeing technology will help that green revolution happen that much faster?
I mean, it's great to know that they're working on a plan B in case everything goes belly up on Earth. Look, I think in New York, the hot topic is really about how do you retrofit buildings to meet sustainability standards. And one of the misconceptions about New York is that it seems like it's a, you know, glitzy, you know, state-of-the-art city, but actually the average building is 83 years old. And recently they've implemented the Climate Mobilization Act, and you know, specifically Local Law 97, which means that buildings need to reduce their carbon footprint, and that covers you know, a huge amount of building stock in the city. So for a while, you know, for about the past year and a half, there's actually been this move to think about, well, what technology systems can we bring in, because we need to, you know, we need to meet these guidelines, otherwise, or not guidelines, but, you know, this mandate to reduce, you know, energy consumption. So, you know, what we're seeing now in the PropTech space is that there's obviously a lot of smart solutions, and some that have been around for quite some time, about being, you know, going back to being able to measure, being able to, you know, work with the building management systems. But there's also some climate-focused funds that are coming through. So Fifth Wall would be the obvious one to look into. They have a focused climate fund, and they also have a PropTech fund. And like everybody else, they have a SPAC. No surprises there. So they're one to look at. You know, they're very sophisticated. They've made some very smart investments, and they're probably the ones to take a peek at leading the charge.
Interesting stuff. Yeah, no, I did read a little bit about the Local Law 97 issue in New York, and it's fascinating to see that. I also did read something recently about the city of Amsterdam is now mandating for all government-owned buildings, or new builds, certainly new builds, maybe not old builds, but materials passport in all their new builds, which I guess is part of the circular economy equation that they're looking at. I don't know, Manish, are you aware of this in Amsterdam? Is that something you guys are looking at?
Yes, I am familiar with that particular example, Richard, thank you. And that is actually essentially showing an example of how much wastage occurs in the industry already from a materials point of view. You know, there's huge financial and environmental opportunities by using the materials used in the property lifecycle much more efficiently. And the material banks project that's emanated from our sort of Dutch colleagues actually goes to asset tag, basically materials in buildings, so that we can, through technology, know exactly what assets reside in them and then reuse them more and more again. And there are many projects now, again, back in Holland and Scandinavia generally, who lead the world in much of this thinking, which are looking at how buildings can have multiple adaptive design, I suppose is the best way to look at it. That it's not just adaptive to the climate, which it will need to be, of course, but actually also adaptive to forms of use. And that's really important in the post-COVID sort of landscape in terms of asset values. If we can have assets that are reusable, modular, changeable, resilient to any type of use, they're going to be more valuable in the future. It's not just about the climate, it's about adaptive design, full stop. I just want to come back on the point about regulation, because I can see some questions on it, if I may. I mean, I'm sure people are aware that there was an energy white paper written last year by the UK government, which started sort of setting out a trajectory, I suppose, and I'm going to pick the example of commercial buildings and commercial leases. Just so that everyone's aware that by 2023, these will need to be EPC rated E or higher, and B by 2030. So if you're a asset owner currently, and you have a large portfolio of assets that are below those thresholds, that's where the term brown discount, and dare I say, the term stranded assets, will become very evident. And Alex, you probably have some insights into this.
Yes, we do. I mean, I think the issue is that in a market in equilibrium, you can see that at the moment you have this sort of distressed market where there's huge demand for certain assets but not for others. But it's absolutely the case that when you're looking at it in terms of the valuation and in terms of the appraisal, a much more comprehensive analysis of the ESG is going to take on board. And in particular, what I would say is that, again, a few years ago, people were looking at BREEAM ratings, etc., for new builds, and at the design stage, the big movement has been towards sort of energy in use and in-use type benchmarks going forward. And that is the huge change, because that's where you start to see the ongoing sustainability of the building. And I totally agree with you. That has to, and I see there's a question about planning in there as well, that has to adapt to the fact that we're much more likely to see multi-purpose buildings rather than just single use going forward. So historically, you look at a sort of building that was a bit of a problem in terms of energy efficiency, something like a shopping center with 150 tenants, all of whom had different sort of temperature requirements, et cetera, but with the repositioning of those, maybe towards partly residential, that has to be rethought very clearly, with a very clearly strategic view about how that can achieve energy efficiency going forward, to obviously to minimize bills, but to make the building saleable in the future. So I totally agree that it's now starting to come into place, and it's absolutely the Dutch pension funds who've been at the leading edge of this in terms of requiring companies to have that in their portfolio.
Very interesting stuff, and it's just amazing the number of issues that continue to come to the fore in the real estate and property industry these days. I want to finish up on one before we go to some question and answer from the audience. Given Nikki's comments about the fact that by 2030 is going to be 75% of the workforce will have grown up with the internet in their lives, and climate warriors, I think there are also people that are very much about equality and diversity and inclusion. That's been a big agenda item over the last couple of years, and we just had International Women's Day Monday this week, which we've all been celebrating. And I just wonder if I could get each of you to just comment a bit about the D&I issue, which is as much on boardroom agendas as everything else we've been talking about. Who wants to lead off with some observations on that?
I suppose I can.
After you, Nikki. After you.
Yeah, I can start. Obviously, I started up the group Women in PropTech a few years ago, and that just basically came out of a recognition that when I was attending PropTech events, I just wasn't seeing many women participating. So I've spent years just talking to people about some of the issues involved, and it's just one of those things we just all have to make a concerted effort, or it's not going to happen on its own. I mean, it's ridiculous. I mean, when we're talking about buildings themselves, it's like, well, we're designing them and operating them for everybody, but it's, when you're creating something for everybody, it needs to be designed, and the decision making needs to be by everybody. I mean, it's just complete logic, but it does take an effort to identify promising individuals and bring them into, give them the training, the opportunities, the pathway to bring them up through the system. So starting right from early career, so that you're not in a position where it's like, well, we're trying to get women on boards and it's slim pickings. It's like, start early. When I was at architecture school, there were more women than men in the course, and all the women were tending to get better grades, and first year out of university, I think the gender pay gap is 20%, like for like. So it's just we've kind of got to catch up.
Richard, I'll comment next if I may. So yes, I think if last year some of the, I suppose, fault lines that existed in society, including a lack of diversity and inclusion in certain sectors and inequality generally, those fault lines got massively exposed because we were a society in strain, under strain, and in crisis. One of those was around diversity and inclusion. And if you look at the property sector, or if you even look at the sustainability sector and actually look at the metrics behind them, there are some fundamental issues there that need to be sorted out. Around the fact that we don't have much diversity, be it gender, be it age, be it race, be it social background, be it other demographics, etc. And so it's incumbent upon people in a position of influence and people in position of being able to work with that to do something about it. And from a climate point of view, and let's just talk about it from a net zero point of view, actually this brings about some issues around just transition. So is net zero the privilege of people that can afford it, or is it actually going to include all parts of society? And there's some very strong correlations between assets, and in particularly housing, which are needing the most work to make them net zero, and the kind of people that own them, the parts of society that live in them, their socioeconomic, racial backgrounds. There are some strong correlations that we have a system that needs to be fixed, not just in terms of getting us to net zero, but actually doing that in an equitable way. And that is in every part of the property life cycle, property sector, and I'm picking housing as a specific example. So I think there are some big challenges there. I'm very proud to be part of Property Week's Diversity and Inclusion Editorial Board, which is starting out on a journey with the industry, to work with the industry to change some of that.
Right. And I'd just like to say, Richard, that I work at an institution that is currently in the process of changing its name for precisely this reason and historical association. So, and we've had, it's fair to say, an awful lot of conversations about this, and a lot of action has been taken on board. In terms of the private sector, I'd actually completely agree with Munish and Nikki there. I think there's a huge realization amongst the leaders in the industry, but I think there's also the need to understand that it can't, their view is that it sort of can't happen overnight. It needs to be a sort of integrated approach, and it needs to be the case that it's a level playing field for all going forward from now. And I think they're struggling to come to terms with it in a number of cases, I would argue. But certainly with people like EPRA, who we look at, we've now moved on from the sort of sustainability best practice awards to now we're looking at this issue again to make sure it's best practice for companies, so to keep them up to speed on it.
Yep. And I'm sure it's going to continue to grow and become the norm. Right now, David Stringer-Lamar has kindly agreed to moderate some of the questions from the audience. David, can I invite you to weigh in with what is the audience asking us?
Absolutely, great. Thank you very much. We've had lots of questions here. There's 15 in the cab rank, as it were. There is some overlap, which is very good and very useful. But the first one I'll put to the panel, essentially, do the panel think that the industry is actually ready to achieve the net zero challenge posed by government, and not just the UK, but is industry actually ready to get there to net zero? What do we think? Who's going to lead us off, please?
I'll be quick. I'll say no, because it's perceived as an added cost.
Excellent. The rest of you think no? Have we got a yes or a maybe?
Munish?
Alex?
I'm going to take a slightly more optimistic view, if I may, Nikki, which is I think we do have the solutions. We do have the know-how. We do have the will in most parts to do it. I think we need to find the right financial models to enable us to do it, to overcome that challenge that you've put, Nikki, which is the cost perception. And I think the biggest challenge we've got is capacity and skills, actually, in the UK. We have a massive skills gap at the moment to get us there.
I would argue as well, I think they're going to struggle to get there, and in particular, to get to a genuine net zero, as opposed to a sort of a token net zero. So I think there will be big challenges. And in addition to which, you've got so many different timeframes that companies are looking at, that shows their level of readiness for it. So I think it will be a bit of a struggle.
Great. Thanks very much. And do you think the government's going to give any money to companies, organizations to help achieve net zero? There's the question. Yes, no, maybe. Is there any money to give, in fact?
I'll kick off with that, if I may, David. I think the government is trying to put the right fiscal incentives in place, be it via sort of punitive taxation or via sort of more subsidy-led type interventions. I don't think it's quite right yet. I think there's more work to do on that. We're obviously in a moment not of lots of economic priorities, not just this one. But I've got great hope that, and what we're seeing is that the market will respond fairly quickly to this. I'm seeing that huge shift in the capital markets, which I think give me great hope. And if you look at where solar, if you look at where LED lighting, if you look at battery technology, if you look at EVs, if you look at all these green technologies, the price has come down, wind turbines, the price has come down so quickly as the market has really got hold of it. So I hold hope in that.
Right, thank you very much indeed. Okay, let's move on to another one here from Will. What do you think is the biggest challenge of implementing environmental upgrades within historical buildings. And Nikki, you mentioned 83 years old. I had no idea about that was the average thing in New York. Gosh knows what the City of London is. Anyway, what's the biggest challenge going to be implementing environmental upgrades within historical buildings? Who wants to lead off, please?
I can go with that. I mean, doing anything in a historic building is terribly difficult because you're dealing with, heritage trusts, etc. So even if you want to, in some cases, even change furniture, you can't do that. So, obviously there's existing infrastructure that you can't tap into. There might not be channels and pipes and pathways, etc. So it's tricky even having thicker walls in some circumstances where it might be a sandstone build, etc., and the materials might actually disrupt some of the sensors, etc. So it's challenging.
I'd agree with
that. That sounds like really challenging. Goodness me, Alex.
I was just going to say, developers I've spoken to, it's actually the floor plate design, it's actually the lack of a large floor plate and the whole point of the problems of the infrastructure of the actual building. So I think there are enormous challenges.
Just to add to, yes, the older building stock is definitely the one that is going to pose the biggest barrier to getting to net zero. 80% of the buildings that will exist in 2050 already exist. There's a fact for you.
Great, thank you very much.
Yeah, Nikki. I like to remind people that whenever we hear the word challenge, that's actually an opportunity for any innovator. So, that's a huge market and a huge problem to overcome. So if there's any innovators and technology providers, think about this and you have a huge addressable market.
I like that. Are there any innovators in the IoD? The answer is yes. So no doubt people are making definitely a note of that one. I'm going to come straight back to you, Nikki. Hopefully I've got the pronunciation right here. Yiqing Zhao. Hi, Nikki. Based on your experience, could you please show some examples how to practically integrate digital experience with physical space, especially for the younger generation?
Yeah, great one. I suppose let's just talk about e-commerce. I'm actually working with a client on, let's call it a click and collect strategy. So and we're looking at something of a, dare I say, like a click and collect experience. Actually, there's a fantastic concept in Helsinki with Posti, their post office. And what they actually created is almost like a post office lounge as an amenity in a building, because there was an understanding about e-commerce that when people receive packages, often they need to just try something on and return it. So there is a change room, there is an area to recycle things, and there is a space to then, scan the package and send it back. So, that's that, and also understanding that a lot of, millennials and Gen Zs are entrepreneurs running Etsy stores from home and, side gigs, drop shipping, etc. So this is, the type of amenity that actually responds to that. So that's just one little example.
Thank you. Any other comments from Manesh, Alex, or are we okay on that one?
No.
All good. Great. Thank you. Well, Alex, I'm going to come at you from Jane to Alex Moss. Do you think that the strategic or local planning land use designations are in step with the changes in the economy?
Well, that's a fascinating question. So I think this is the big challenge. So the big sort of change of use that you've seen, all the shopping centre owners applied for sort of planning for residential. The big issue that the local authorities have got is trying to decide what they want within the local area. The huge demand is for industrial. They hate industrial, particularly the big boxes, because there's no employment. So they have a huge issue to address, particularly in terms of their own funding shortfall, in terms of what is actually going to be the future tenant requirements, and particularly if it's going to be a mixed-use building, does that actually comply with existing regulations? So I agree, I'm not sure they are in step at the moment, but I'm not sure as well that developers have completely got their ideas about what the perfect tenant mix would be for some of these schemes.
Excellent. Thank you very much. Now, this is the last question, a short one, if I may, from you. Yes, no, maybe, from Jonathan. With cash so related to carbon, do the panel agree, loaded question, that CRS ESG professionals would achieve far more if they reported to the CFO rather than the CMO? So is it all about cash? Should they be reporting to the CFO now? Is it all about cash, or is it actually achievable, and should we be doing it? Comments, please, short.
It's not all about cash, it's about line of command. So you need to report to the CEO.
Agree with Alex. That's exactly what I was going to say.
Awesome. Nikki?
I'll agree with them both.
Fantastic. Excellent. Thank you very much indeed. We're out of time on the Q&A aspect there. Fascinating. Nikki, Manesh, Alex, on behalf of all of us, I've made an enormous amount of notes there. Thank you ever so much for bringing your expertise and your sense of humor, and also your positivity. And thank goodness you didn't agree with each other so much. So that's very good indeed. You had a great breath there. Thank you. Can I have the next slide up, please, team? Thank you very much. So these are our upcoming events. So next week, interview with, 22nd of March, interview with Miles Selleck, CEO of the City UK. Wednesday, 31 March, micro credentials, adapt now or be left behind. Next one, please. Let's go the other way. I think we've been there. Brilliant. There's the other event calendars. You can see we've got lots of things coming up in April as well. IoD London region, the 2 branches, City and Central, very active. Do get involved. Next one, please. I really can't even understand this one. Why on earth aren't you already a member of the IoD? Goodness me. But however, if you are not, and you should wish to get involved with us, which is obviously an excellent thing to do, at the moment, we're doing a 20% discount from the joining costs involved. There's all these great branches here in London. We have 7 overseas branches as well. Member of the Global Network of Director Institutes. Lots of things going on. Terrific aspect here. Professional development. Very engaging, lots of connectivity, and it's a great place, to connect, hear, and influence not only today, but also tomorrow. I'd like to formally thank the chair of the Property Special Interest Group, Richard Nelson, and the team for all the great work that goes behind this. I'd like to thank Jeremy and Shaq, the digital heroes who've been putting this all together so well. And of course, formally, I'd like to thank the chair of IoD City of London, Alistair King, and all the board for everything they do. Thanks for being here. Keep getting involved. Together, we'll make a difference, and we will help make business happen. Thank you very much. Good evening, good morning, good afternoon.